Kunal here, Bulls on Wall Street. Guys, what a day in the markets. Today, I want to go over a couple things that are important. Number one, do we have some type of potential trend reversal? And what are the parameters that we look into it? And then I'm going to show you a Friday strategy that I really like to use when we have these volatile days, which is using options to really nail down some big damn trades. I mean, I'm talking like, right, big trades. When you get days like this, you can do all sorts of cool shit. So let's get into this. So first of all, the market gap down on the jobs report numbers. You know, in the chat room and also on YouTube Live, I had lined out some different scenarios. If we had built under yesterday's lows, you know, that would have given us an opportunity to go short. And it looked like we were going to do it for a second, and it reversed. And I actually had a couple shorts in the morning on AMD, and they worked for like 5 minutes, and then everything reversed when the market started to hold. And so when we see this, it's the second time in a row we had a big move down, and then the market reversed. And so you can see even the previous day, right, we kind of gapped up, filled the gap, and then we reversed. And so we're starting to see a change in character in price. And I think that's really, really important to kind of keep in the back of your head. We've got 3 days in a row that the dips have been getting bought. That is something to really, really build off of. The other thing is today, when the market gap down is down 1.2%, you finish up 1.6%, 3% turnaround. That's a huge move, right? This is a bullish engulfing candle at this point, and we have subsequently taken out some big range that we had kind of marked out as, you know, as a potential, you know, W pattern reversal. And so we've got this going for us too. And so at this point, it looks like we may have a little bit of a sustained bounce. Some other things that I think are important. Let's take a look at market breadth. This is something I've been pounding the table on with my guys of recent. When the T2108 indicator goes under 20. T2108 indicator is a market breadth indicator that is showing you percentage of stocks over its 40-day moving average, and I also track percentage of stocks over its 200-day moving average. But historically, anytime we've gotten a number under 20, it's coincided with some big market bounces. You know, if you look back over here, right, we got on the 14, 15s, we ended up with a big market bounce. And you can see like back in October, we got really, really under this near the 10 spot. And then we subsequently rallied into, right, the new year. And so you see here, like, this level of oversold usually leads to big market bounces. They're not always like epic reversals. They go for months and months, but they do lead to some type of market bounce. The extreme oversold readings lead to these kind of things. The other thing to kind of just be mindful of is, right, even in the pre-market, the S&P 500 also tapped into the 200-day moving average. Its first test since March. And so we have a lot of things going for it. And so, you know, in the morning, you know, we were actually short for a few minutes and actually made a couple bucks on the short side when the market kind of drifted lower for the first, you know, handful of minutes. And then subsequently, when we started to bottom out and break over the VWAP, I had to flip long and stop out of some things. That's the nature of the thing. When support holds and you know the nature of what's happening in the market, sometimes you got to take small losses and then move on ahead. But today I want to talk to you about a strategy that is really, really important here. So when the market starts to go like this, so one of the things I mapped out for the guys in the chat room is, hey, if we break over this 357, then it's going to be gangbusters. I'm on Zoom all day in front of my guys, and so I mark out this level. It's about 357.20 on the Qs. I tell the guys, look, you know, we may chop around, but if we bust through this, because when we saw this big candle here, that's a telltale sign. What I mean by telltale sign is like we looked like we were going to break down an ORB. When you get this big monster candle here, that's a sign, right? Like, okay, we've got something brewing here. There's something percolating in my pants, right? Then you get an inside candle. And when you take this out, that's your signal to really, really go long. So we added a bunch of stocks at that spot in the chat room. And, you know, what we want to do is also kind of use options to really supercharge, right? Really supercharged the trades on this bad boy. So at this point, as this is happening, I start to get long NVIDIA, I get long AMD, and, we really start to kind of shred into these things. And so, right around 10:18, I long AMD 103.55, I long NVIDIA 445.60s, and, now it's off to the races. And so the setup on this is, okay, we have something on the daily chart. Now I want to find something that's mimicking it on the intraday. Well, two things that why I choose AMD and NVIDIA is, number one, semiconductors tend to lead the way, and they tend to have the most, right? They have the most range when markets start to really bounce. The second part is levels, right? NVIDIA had a big level here at the 50-day moving average, where it had just been basing under, and it was kind of where it stalled out yesterday. And so I know if we can get over that, it's off to the races anyway. So I want to preempt all this. The second part is AMD also had, right, a nice level here. If you're looking at the 15-minute chart, you can see here, like 104 was a big kind of breakout on it. And so we had this kind of coil pattern that's brewing. And so when it takes that out, right, we know this thing can go. And so I want to come in. So I've got these levels that are just built out on this thing. On the daily chart, this is pre-planned, right? Hey, if this happens, right, these levels are mapped out, we game plan this thing, and then it's off to the races. So what I want to do is, all right, so NVIDIA comes in, I add this thing at 445.60s. And so what I want to do is, like, I'm looking at the resistance from the previous day, which is about 449, 450, right? That's the breakout spot. That's going to be the magnet spot. So what I want to do is take the calls on this bad boy. I want to take the calls on this bad boy and start to add them. And so into this candle, right, I'm buying this NVIDIA right here. And so subsequently, I'm hitting on the options trade, and I had about 75 cents sub-average. I added a little bit lower, and then, by the end of it, my average was about 70 cents. And so the options are cheap because it's Friday. So you want to hit this hard because NVIDIA options are usually really expensive, but because it's Friday, you can really put the teeth on this thing. And now your risk is really, really low. Like, I'll put my risk just at like maybe 50 cents. So I'm going to risk about 20 cents on this. And even though that seems like a lot of risk, I'll start piecing out of it quick, like if it doesn't work, and, trade around the core a little bit. But I got this thing around 70 cents. I usually just put an oh shit stop at the bottom of the candle. And then if it doesn't work, I'll get out even faster than that. And then it's just off to the races, right? My first target's going to be the red to green spot. And then I want to scale out into these resistance spots. And so that's what I end up doing. We end up coming in, and I end up selling off half at the red to green spot, sell off a little bit more at 447, sell off some more at 449. And then we start to trade around these things. And so I piece out of a chunk of it, this at 449. Now the options are at $1.80. And so, they're up over 100%. But this is just the beginning. We know on the daily chart that this 450 is a big breakout. And so what I want to do is start to piece back into this thing. And so I start adding back in as it starts to hang at that 449 and build. I add a half position. I will add a position, and then I want to really get some size in it because I've got like a quarter to an eighth. Then I add a whole lot, and then I add another half. And so now I'm at almost two full-size positions as it's starting to build because I'm going for the big run because this has the potential to be a home run, right? And this has the potential to be a trender because we've got a big reversal on these things. And so now once we start adding this thing, and I'm starting to come in, I add my last half over here into this flag right around 11:30, right? 11:30 Eastern time. So 11:30 Central time. So around 12:30. Now we're really off. Now we're really off to the races, and we can start to really scale out of this thing accordingly. And what happens is because 450 is the strike price, once you start to really push over that level, the options will start to go exponential on this bad boy. And that's how you start to really kind of come in. And of course, I'm a piker here, so I always sell out a little bit early. I sell out a third at 450, 120s. and then I sold some more 452 80s, and now I'm really piecing out of these things as we come in, and I'm just selling out of these things as it's starting to kind of cruise higher and higher. And I got an original batch, and then I'm adding to these as it starts to go. And so I think that's a really way you want to build upon these things. And man, when you can nail this right, you can really have those. So some of my original, right, 450 calls, like they were up 700%, right? You're coming in. I sold my last batch about 590s. I had a whole shitload of these down here, and then, right, sell some, reload some, and you're trading around this a little bit. But this is how you really get into and start building accounts. Now, look, I didn't hold my whole fucking position, right? For 700%, I'd be a cajillionaire at that point, right? But this is like your last 1/8, 1/10 shares. Those are the ones that can really pay you. But the reason I can build on this trade and it can be so effective is that I didn't just come in and have one lot and then just trade around that, right? I'm trading around my position. I have a core position and I'm selling off, and then I'm reloading some, and then I'm reloading some more. And so, I ended up adding twice, right? Once I reloaded in the 449s, I added a full size. And then once that flag started to build and that 9 EMA caught up, right, I'm adding more to it to get the size that I need. And then it's just piecing out. I'm piecing out really every like $1.50, $2 at this point, because I don't even want to sit there. These things are so wild. Like, I don't even want to come in and try to hold it for the home run the whole way. I mean, theoretically, I can raise up my stop losses while I do this, but that's not really my style. I'm a base hit trader, and that's why I stayed in the game for so long. And then if I can build on it, then now I've got something that's a really, really good trade, right? And so this was an awesome trade. I'm actually pretty happy with how I handled it. And then I did the same thing, right, with, AMD. I added 103, I had 103.55 was the trigger on the, on the chart. And so I'm adding the options right around the same price. I had 60 cents, 70 cents, added 60, 65 cents. And now, dude, you guys, you get what I'm putting down here. And this is more of a Friday thing, because these things are expiring. They're going to move a lot more. But guys, this has happened now, a couple Fridays in a row, right? Check out last week's video. I did the same thing on coin. These Fridays on options are really, really good. Key is not the oversize. Look, even something like in the video, if you have 100 contracts at 60 cents, it only costs you $6,000. If they go to zero, it really sucks, right? But, even if you put a 50% stop loss on it, okay, you lose $3,000. It's not the end of the world. It's not ideal, right? For me personally, I want to keep my position sizes where if I get stopped out of a trade, I lose about $1,000 on the trade. If it's a high conviction trade, meaning it's something that's a bread and butter for mine, I'll take my risk to 2,000, maybe even 3,000, but I never go more than that, because that's when it starts to get to that point where if you lose on one, and then you get stopped out on the other one, right? 3,000, 3,000. You get stopped on another one, just 10,000. Your whole fucking weekend is shot, right? So you got to be a little bit careful of this. But this is an awesome kind of Friday strategy. The key is just to watch your size. Look, if you're a smaller account, you say you trade $10,000, $15,000, 10 contracts at 65 cents, $650. Maybe 15 contracts if you have a high conviction. Use a 30% stop loss. Dude, now you can really start to build on these things. Guys, hopefully that helps. There were a couple tells. I know a couple people were asking me, was there any tell, at the open? I thought Google was a tell, right? Like it went red to green right off the bat. I thought that was, there was a couple of stocks that started to do this. So I think that's good. That was an important tell, on that. And then, the SPY in the pre-market tapped right into the 200-day moving average. And I thought that was, pretty much right into it. I think the 200-day moving average is at 420, and we got right into it. So I thought that was a tell too, that when it wicked down in the pre-market, right, you started to reverse right away, so that support was holding. So just something to kind of keep in the back of your heads. Guys, hopefully that helps. Let me know if you have any questions. Man, what a hot market. I know everybody's been saying this market stinks or whatever it is. I have not noticed that. Yes, it's not a buy and hold market. It's not a swing trader's market. But if you're a scalper, if you're a day trader, this market's been pretty cool. Like, it's not easy, but there's a lot of range, both long side and short side. You just have to adapt your strategies constantly every single year. You don't want to be like one of those traders that just draw squiggly lines on their charts and then thinks that's going to make them millions of dollars year in and year out. That'll make you millions of dollars, but about 1 out of 4 years when the market just gets a COVID style wonky, which we get a lot, right? So this is America. This shit happens. But otherwise, hey, let me know if you have any questions. Smash that like button. I love you guys. I'll keep doing these. Let me know if you have any questions. Peace.